Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be covering a life insurance company by the name of Prudential. You've likely have heard of this company, either seen their commercials or just know of them since they've been around for so long. I've been an investor in this company for a couple of years, and I wanted to review my analysis that I updated today. So I like to scorecard my investments, and it's really 4 criteria, with the 5th element being a decision. First, I want to know, do I want to be in this particular industry? Is the company operated and performing well? Is debt under control? And am I getting a discount when I'm buying shares in this particular company? That leads me to give me the information to make the decision, would I buy this stock today? Over the last 12 months, Prudential has not done well. They're down almost 13%, but that's right there with the S&P. The S&P was down about 13% in 2022. The NASDAQ was down far worse. So they're right there with the NASDAQ. If you look at the 5-year, it's pretty much down about 19%. It has paid a really nice dividend. They pay a high dividend. So you are receiving a dividend as you hold this stock. And if you look at the real drop in 2022, you could have really picked up this stock and really done well with it, really risen from like $40 a share and really doubled your money. Now, how much is this company worth? This company I'm valuing using free cash flows and discounting those free cash flows, but I'm also looking at book value and price earnings value, just to blend, because this is a financial services company in the form of a life insurance company. So I just want to have a good blend so that I know that I'm getting a good cross-section valuation. And I'm taking their free cash flows, their latest year, which is $9.8 billion of free cash flow, discounting them on a weighted average cost of capital. I get that from Finbox, and that's what the weighted average cost of capital for Prudential is. And their growth rate pretty much is flat, zero growth. I'm not expecting any growth in years 2, 3, 4. And based on that criteria, the net present value is close to 94 billion, but the market cap's 38 billion. So if you use the free cash flow method, there's a big discount that you'd be getting on this particular stock. But if you use the book value method, there's about a 31% discount. And if you look at the price earnings method, it's only about a 2% discount. So if I blend all three, it's about a 30% discount. Overall, it's still a discounted stock. This is kind of a boring company that's going to pay you a high dividend, and I think be worth quite a bit, especially if you buy at the right times at the right price. You can buy in at a very good price, get a nice gain, and be paid a really nice dividend. All right, so Prudential, let me review them. First, Prudential's somewhat of a boring stock. They're a life insurance company, so they don't grow very quickly. 5-year revenue growth of 4%. They generate great free cash flow, a yield of 26%. They have a very high dividend, almost 5% dividend, real nice dividend. And they're rebuying shares, which is good to see. Their revenues have been decreasing. Fewer people are buying their financial services products. We're really seeing a recession in financial services currently. I think that's affecting them quite a bit. Going forward, they're going to be paying the very high dividend. It's expected that they continue to pay that high dividend. They're going to have higher interest rates to work with so that they can do more with their capital, the funds that they hold in these life insurance plans. They can get better returns on those, and that is going to help the top line revenue as well as the profitability of the company. All right, so now let's scorecard Prudential. Is it an industry I want to invest in? Yes. It's an industry that gives me diversification away from some of my technology stocks, other industries that are, more exciting and have, greater upside. But Prudential gives me stability and a really nice dividend. Now, is the company operating and performing well? The answer is no. I think a large part of it is the industry is in a pretty good recession, but it's still not performing well. they've got too much debt. They got to lower their debt. And you do get a discount on this particular stock, which is good. But overall, I'm not buying additional shares at this time. I'm waiting for them to really begin to perform better. I want their financials to look a little better before I buy additional shares in this company. Well, thanks so much for watching my video. Just a quick reminder, this video is for entertainment purposes only. I'm not recommending you buy Prudential stock or any other security.